Most people see crypto as a long-term investment, imagining years of holding on to coins and waiting for the next big surge. But there's another side to this market that's all about speed, precision, and quick decision-making. In this fast-paced world, traders jump in and out of positions within hours, or sometimes just minutes, constantly scanning the markets for the next opportunity. Every second counts, and hesitation can mean missing out on a profitable move. Instead of betting on a coin's future potential, short-term traders focus on quick price movements, profiting from small, everyday fluctuations that most investors might overlook. They thrive on volatility, using technical analysis and market signals to make split-second decisions. Crypto's wild volatility is their playground. Every swing, spike, or dip is a new opportunity to make a profit. The market never sleeps, and neither do the most dedicated short-term traders. Unlike traditional investing, this is about speed, discipline, and stacking up small wins. Success comes from sticking to a plan, managing risk, and not letting emotions take over when the market gets wild. You're not investing in a company or a project. You're reading charts, spotting trends, and acting fast. It's a constant battle of wits against the market, where knowledge, experience, and intuition all play a role. It's a game of probability, where the goal is to accumulate many small profits rather than waiting for one big payoff. Each trade is a calculated risk, and over time, those small wins can add up to something significant. Welcome to the high-speed world of short-term crypto trading, a place where fortunes can change in moments, and every tick of the clock brings a new challenge.
Why choose this high-stress approach? Simple, faster, more frequent profits. Short-term traders put their capital to work daily, compounding gains quickly. They can profit whether prices go up or down, thanks to tools like shorting. It's hands-on, strategic, and appeals to those who love the challenge of beating the market. News, hype, and even tweets can create instant opportunities if you're quick enough to catch them. For many, it's not just about money, it's about the thrill and control.
Success in short-term trading starts with mastering candlestick charts. These visual tools are the heartbeat of every market move, capturing the story of price action in real time. Each candle tells a tale of buyers and sellers, of momentum shifting and opportunities emerging. They reveal not just price action and market momentum, but also the underlying psychology driving the market. By reading these charts, you can anticipate potential breakouts or reversals before they happen. Technical indicators like moving averages and RSI help spot trends and reversals. Moving averages smooth out price data, making it easier to identify the direction of the trend, while RSI highlights when an asset is overbought or oversold, signaling possible turning points. But the most crucial tool? The stop-loss order. It automatically limits your losses if a trade goes south. Setting a stop-loss is like having a safety net, protecting your capital from sudden market swings and emotional decision-making. Without it, a single bad move can wipe out your capital. Even experienced traders can be caught off guard by volatility, so never underestimate the importance of risk management. Choose a trading platform with low fees, high liquidity, and rock-solid reliability. The right platform ensures your trades are executed quickly and at the prices you expect, minimizing slippage and unexpected costs. Fast execution and dependable service are non-negotiable for active traders. In fast-moving markets, every second counts, and delays can mean missed opportunities or unexpected losses. Your tools and platform are your edge. Use them wisely. Take time to explore advanced features, backtest strategies, and stay updated with the latest market analysis. In this game, preparation beats luck every time. The more you plan, research, and refine your approach, the better your chances of consistent success in the volatile world of crypto trading.
The difference between winners and losers. Risk management. Never risk more than you can afford to lose. Stick to the 1% rule per trade. Set clear profit targets and stop losses before you enter any trade. Focus on trades where your potential reward outweighs your risk. Emotional discipline is key. Don't let fear or greed dictate your moves. Treat trading like a business, not a casino. Survive first, profit second.
Start small. Begin with an amount you can afford to lose. This way, you can learn the ropes without risking your financial stability. Treat your first trades as tuition, not a get-rich-quick scheme. Every loss is a lesson, and every gain is a step forward in your education. Keep learning. The market never stops evolving. Stay updated with the latest news, trends, and technological advancements in the crypto world. Beware of scams and hype. Many promises of quick riches are traps. Always verify information from multiple reliable sources. If it sounds too good to be true, it probably is. Trust your instincts and do thorough research before making any decisions. Stick to your own research and strategy, not social media noise. Develop a plan and follow it diligently, adjusting as you gain more experience. Take breaks and protect your mental health. Trading can be stressful, and burnout leads to bad decisions. Regular breaks help maintain clarity. Burnout leads to bad decisions. Ensure you have a balanced lifestyle to keep your mind sharp and focused. Set trading hours and step away from the screen regularly. This helps you avoid impulsive decisions and keeps your trading disciplined. A clear mind is your best asset. Meditation and relaxation techniques can help you stay calm and composed. In the end, success is about discipline, strategy, and keeping your cool in a wild market. Stay focused, stay informed, and stay disciplined.